In today's video, we raise several questions that deserve an answer. Has there really been no crisis? And if so, what is the reason behind this absence? Was it so difficult to anticipate everything that has happened? Well then, buckle up, because we will explore these questions right now. Welcome to the channel. This is MoneyDynamo. Subscribe to make sure you do not miss any video. To start, it is undeniable that 2023 presented many conditions to be a year in which a deep recession would unfold, even with the potential to affect globally. However, this recession did not materialize. But before celebrating, it is crucial to note that, in economic terms, things have not gone so well everywhere either. There are places where the economy has faced significant challenges. An example is Argentina, which accumulated an inflation rate of 160.9% in the first 11 months of the year, although the December 2023 data is not yet available. However, we don't need to go so far south, as in Europe, especially in the largest economy of the European Union, Germany. The GDP has not experienced growth throughout 2023 and has constantly flirted with recession. Now, if we turn our gaze to the world's great economic power, the United States, the situation changes. Despite predictions pointing to an imminent recession due to a significant rise in interest rates, the reality has been different. There were moments of scare, such as the bankruptcy of Silicon Valley Bank and the threat of the fall of Credit Suisse, which was eventually absorbed by HSBC. However, authorities reacted in time and managed to stabilize the situation. Even situations like mass layoffs in major tech companies turned out to be mirages aimed at improving efficiency rather than signaling a real crisis. The big surprise came in the quarter when the US economy grew an impressive 4.9%. China, despite initial problems stemming from the zero-COVID policy and challenges faced by giants like Evergrande, has managed to steer its course and is experiencing solid growth. So, in response to the first question, we can affirm that, indeed, there has not been a major recession, and the economy has fared well in most places, if not very well. Now, let's delve into why this situation occurred. Remember that one of the main reasons for anticipating a recession was the notable rise in interest rates. Central banks adopted this measure to combat high inflation. However, things did not follow the typical script of recessions. One of the key factors that helped prevent a crisis was the savings accumulated by families during the pandemic years. During lockdown, spending decreased, and many families could save. This savings acted as a cushion when the expected rise in interest rates was supposed to affect consumption. Public spending also played a crucial role. Many governments made significant investments to stimulate the economy, even borrowing to finance infrastructure construction programs, SME rescues, and defense spending. This high public spending helped keep the economy afloat. Furthermore, the prior indebtedness of many companies and families when interest rates were low also served as a buffer. Those who had taken out loans at low rates over an extended period were not immediately affected by the rising interest rates. Stabilization of supply chains was another crucial element. In 2021 and 2022, supply could not keep up with demand, especially in China, where COVID policies shut down factories and ports. However, in 2023, exporting countries increased their production capacity, and companies diversified their suppliers, thus avoiding significant stresses in supply chains. The improvement in geopolitical situations also contributed to avoiding a recession. Despite the ongoing war between Russia and Ukraine, the world had time to adapt and seek alternatives. China's conciliatory attitude, deciding not to directly involve itself in the Ukraine conflict, also contributed to global stability. In summary, the combination of family savings, high public spending, prior indebtedness, stabilization of supply chains, and an improvement in geopolitical situations has prevented the rise in interest rates from leading to a significant recession. By observing the GDP formula, consumption plus investment plus public spending plus exports-imports, we can see how each of these elements played a key role in keeping the economy running. However, we cannot ignore the lingering warnings. The increasing debt of governments, the need to address inflation challenges, and dependence on accumulated savings are issues that must be addressed to ensure sustainable economic recovery. Continuing with the analysis of the economic situation, it is crucial to highlight another element that has contributed to stability: the accelerated digitization of the economy. In recent years, digital transformation has become a constant trend, but the COVID-19 pandemic significantly accelerated this process. Companies from all sectors were forced to quickly adapt to digital environments, increasing their operational efficiency and allowing them to remain operational even in challenging conditions. The ability of companies to quickly adopt new technologies and remote work models has been a key factor in maintaining productivity amid economic uncertainties. Those companies that invested in technology and digitization before the crisis had a significant advantage during the subsequent period. This shift to digital not only improved the resilience of companies but also generated new growth opportunities, especially for those in the technology sector. Another aspect to consider is the role of financial markets and their ability to absorb and adapt to volatility. Although there were episodes of concern, such as the bankruptcy of Silicon Valley Bank, the quick response of regulators and the adaptability of markets helped prevent a systemic collapse. Financial systems, for the most part, have proven to be more robust and capable of withstanding shocks than in previous crises. Furthermore, international collaboration and solidarity among countries have been crucial in avoiding an economic disaster on a global scale. Despite existing geopolitical tensions, the international community has worked together to address economic and health challenges arising from the pandemic. This collaborative approach has contributed to maintaining stability in many aspects, from international trade to vaccine distribution. Regarding inflation, although it has been a concerning issue, the proper management by central banks has prevented it from spiraling out of control. Transparency in communications and the implementation of specific measures to address inflation have provided some confidence to markets and consumers. However, this remains an aspect to monitor closely, as future inflation management will be crucial to maintaining economic stability. As we move towards the future, it is essential to learn from the lessons of these events. The importance of long-term planning, business resilience, investment in technology, and international cooperation stand out as fundamental pillars for building strong and sustainable economies. Although the economic landscape has challenged initial expectations, the combination of factors such as family savings, public spending, digitization, financial market resilience, and international collaboration has prevented a massive recession. However, continuous vigilance and strategic actions will remain essential to address persistent challenges and ensure equitable and sustainable economic growth in the future. As for the major recession that was predicted, has it really been cancelled or just postponed? The answers to these questions are still to be seen, and as always, the economy remains a field in constant evolution. See you in the comments to discuss and reflect on these issues. And remember, if you liked the video, give it a thumbs up and subscribe to make sure you don't miss any of my videos.